please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Then, the Nifty has shaved off a tad bit from the high point of the day. ONGC is one stock that's moved lower. Reliance Industries as well, after holding with a gain of around 1.5%, that slipped a tad bit. And GAIL as well is slipping a little as we speak. So just keep an eye out on a couple of these stocks. From the word go, the Nifty Bank has been a relative underperformer, and ICICI Bank as well has been, a bit of a naughty boy out there. So just keep an eye out. 0.2%. You have the Nifty that's up close to 0.4%. But Ashwini as well as Sandeep are with us. Ashwini, coming across to you first. Well, when we spoke a couple of hours back, you were telling us that, the Nifty will find it a little difficult to get past the 10,500 mark. That's really been the case, actually, because we're holding at around 10,480. Virtually not done much in the last hour or 90 minutes or so. Do you believe that, in fact, we don't have it in us to go up towards the 10,500? Would you look to short the Nifty at these levels? Or do you think that, in fact, the Nifty Bank would be a better play?
See, in my view, we are not doing too poorly. I mean, we should have lost most of the advancing stocks, should have become decliners, etc. That is not happening. The mid-cap space remains strong. So, today what you would like to do is to buy this dip and hope that by the end of the day, you have short covering, etc. and both the indices cross over. Because obviously there are people on the other side who have written calls, etc. and who don't want the Nifty to cross beyond 500. But my view is that we will probably cross, and you should see, once the short covering starts, I think last 1.5 hours could be fairly exciting on the upside. Having said that, Dredging Corporation is a buy with a stop of 860, target of 905. DLF is a buy with a stop of 256, target of 272. And Motilal is a buy with a stop of 1480, target of 1550. I think most of the shorts are in the banking space because of, the yield, etc. So chances are Bank Nifty could outperform by the end of the day. Already we are seeing several PSU banks are making highs of the day.
Right. Sandeep, good afternoon to you as well. What are your trading ideas for the afternoon?
Good afternoon. I would go with a buy in a India Cement, stop loss of 181, target of 190, and a buy in a Bharat Forge, stop loss of 732, target 758.
Okay, all right. Thanks so much for joining in and, in fact, giving us all those details, and Sandeep as well as Ashwini. Well, keep an eye out actually in the select mid-caps. They are moving around. Just pull up a couple of these banking names. Syndicate Bank, that spikes up as we speak. It's moved virtually to the high point of the day. India Bulls as well is moving higher, though there is some profit booking in a couple of stocks. Something like Marico, in fact, Samera, has slipped in the last few minutes. That's moving lower. So a couple of stocks moving around. They're moving to that stock has fallen close to 100%. It's been quite a sharp drop actually on that one.
Halftime report. As protests continue to rock parts of Maharashtra, a discussion is now underway in Parliament as well, where the opposition is now demanding an apology from the Prime Minister. Congress leader Mallikarjun Kharge has raised the issue, and the question that he is asking is who has instigated and interfered in this event. He also goes on to say that a Supreme Court judge should be appointed for an inquiry into this, and they are now demanding that the Prime Minister also give a statement. We'll continue monitoring the developments there in Parliament for you, and we'll go back to it as and when there are more developments there. But let's focus on the big event that's lined up, and that is the union budget. So as we count down now, here is what the Group CFO of L&T, Shankar Raman, says he expects from the Finance Minister on the 1st of Feb when the budget is tabled in Parliament.
I wish the Finance Minister walks the talk in terms of reducing the corporate tax to 25% to every assessee. If not for the tax rate coming down to 25%, I would expect them at least to look at MAT, because today the rate of MAT is so very close to the rate of effective tax that most of us pay that it ceases to be the benefit that it once was thought to be. And secondly, I think if infrastructure is the way to go forward, I think some of the benefits that are there for investments in infrastructure sector needs to be restored. For example, contractors who build the infrastructure assets are not given the benefit of 80IA, which a developer gets today under the tax regime. Now, these are important tweaks that the finance minister can make. Last year, if I remember the numbers right, including railways, about 2.2 lakh crore was allocated, of which about 97,000 crores was for the transportation infrastructure. For sure, the government resources are stretched because of the so many diversions, deviations to the plan that was dished out in last February. But the fact is, if they are able to meet their commitments of 1 lakh crore incrementally, I think we would take a big step forward. My assessment is about 75 odd thousand crores as against the 97,000 crores would get spent this year, and as against 2,21,000 crore, possibly about 1,60,000, 1,70,000 crore would get spent.
Well, sources tell CNBC TV18 that the Rural Development Ministry has sought an allocation of 60,000 crore rupees for Manrega in FY19. Anshu Sharma has been on top of that. She's joining us yet again to run us through all those details. Anshu, over to you.
That's right, Nigel. Budget allocation alone for Rural Development Ministry was close to 1.05 lakh crore for the current financial year, of which 48,000 crore was allocated specifically for National Rural Employment Guarantee Scheme of the government. What we understand from sources in the government is that close to 55,000 crore has been the expenditure under the NREGS program of the government, and the ministry is seeking about 60,000 crore for FY19. Remember, some of the new initiatives that has been taken by the government under this scheme has been geotagging, direct benefit transfer, seeding of Aadhaar, amongst others, and over 11 crore workers are working under this program actively. And considering that we are staring at general election in 2019 and slew of states are also gearing up for election, this will be crucial for the social as well as rural development. Back to you.
All right, Anshu, thanks very much for giving us that lowdown. Well, the power sector is also in focus today as statements from the power minister indicate that electricity tariffs across India are expected to rise by 62 to 93 paise per kilowatt during the first year of upgrades to the coal-fired power plant. CNBC TV18 caught up with Ajay Kumar Bhalla, the power secretary, earlier this morning, and Anisha Jain is here to round up that conversation for us. Over to you, Anisha.
Well, yes, we did have a chat with the Power Secretary about a whole host of issues. The top of the mind were the emission norms that the thermal plants have to be compliant with. He did mention that it might impact tariff by 60 to 90 paise per unit. He did say that the capex involved for upgradation can be anywhere between 80 lakh to 1.2 crore per megawatt for these plants. But he did also mention that all plants don't need to go under the upgradation immediately, and that will happen only in a phased manner. Remember, 400 plants with capacity of 170 gigawatt is what is expected to be upgraded over the next 5 years. Now, of course, it will involve a lot of costs, but a part of this cost will also be transferable by these generating companies. So he did mention the additional cost will be a pass-through if you follow the cost-plus mechanism of PPA, and if you are in the bid tariff mechanism of PPA, then it will be treated as a change in law, and you will be allowed to bring in that more tariff from the consumers. Other than that, he did say that he's expecting the power demand to go up given the macroeconomic conditions look better. He did mention that they're committed to the target of getting 10,000 electric vehicles, even if we have seen some delays in the order recently. He did say he's committed to the fact, and 500 electric vehicles will be procured soon. In fact, on that note, let's listen into what Power Secretary had to say. Back to you.
When the tenders are called by individual units, they will get the competitive bids, and when such a large-scale technology will come in, it will definitely bring down the prices. So impact on tariff will actually be known when the bidding takes place. As of now, yes, I mean the investment will have to be made by the respective plants. There are two types of things. One is the cost-plus model, where mostly central government plants and state generating utilities supply power on a tariff which is calculated by the regulator, what we call as the cost-plus model. There, any additional cost incurred will be passed through. For the bid tariff, it will be treated as a change in law, and the regulator will consider the investments made and decide accordingly that how much of it will be passed through for looking at the recovery period of this investment. The phasing plan was prepared, it is unit wise. The unit needs to be shut down to add a desulfurization unit for a few months. So we had to put it in a phased manner. So this is a 5-year time frame where more than 400 units will be acquiring this. So the tariff impact of this nature, one thing, for each plant it will not be there, and secondly it's over a period of time. In our plan, out of 196 gigawatt coal-based capacity, we have submitted that about 10,000 megawatts will be phased out as retirement. This is now all over the country, not NTPC. And remaining, some plants are already compliant. So it is about 170 gigawatt of plants which needs this desulfurization. And then some of those will need nitrogen emission control also.
All right, let's good at the midway mark. Suddenly, in fact, that bit of a hiccup again has come in. Just pull up the intraday chart of the Nifty. It's cut close around half of its gains. We're down to around only a 20-point gain. When we started off the show, it was nearly around 40 points. I'll tell you why. Wipro, that stock, in fact, has taken a bit of a knock in the last few minutes. We have ONGC as well. That's taken a hard knock. I think a couple of other stocks, maybe TCS as well, has come off the high point of the day. ONGC, GAIL, Bajaj Auto as well. Just pull up the intraday chart over there as well. It's not looking too good. I mean, these kind of moves are going to create a lot of volatility, actually. Just take a look at that. Someone's really, decided to press sell in the last few minutes at least. Let's see whether or not it stabilizes from here. But we are moving back towards the 10,460 odd mark. Early morning we thought, well, at around 10:30 odd, 10,500 was there for the taking. But that seems to be a bit of a resistance. Just take a look at some of these stocks, even from the mid-cap space. Adani Power is doing very, very well. Now, that shaved off a tad bit from the top. We have some shaving off even on Reliance Naval, but that stock really has been all over the place. So, the intraday chart of some of these stocks should be up for you on the screen. Well, keep an eye out. It's a dangerous market really to trade in the way things have been moving. Intraday, remember the first trading day of this calendar, we did see a last hour sell-off. Yesterday, in fact, we managed to claw and end with some gains. But just now, things were looking good. Everything was looking quite stable. And suddenly, in fact, there is some selling that has crept in. So we'll keep an eye out whether or not we can hold on to the 10,450, 10,460 odd mark and maybe make another dash to the 10,500 mark. In fact, will the bulls come in to defend the 10,400 mark? Last couple of hours of trade are going to be quite crucial today, actually. But let's move on. The electoral bonds are here. The government has notified the rules to pave the way for a new instrument hoping to enhance transparency in political funding. So here is how they work. These bonds will be interest-free and will carry a validity of 15 days. They will also be sold at select branches of the State Bank of India, and the payment will be made only through bank accounts.
The donor must comply with the Know Your Customer KYC norms of the bank, but here's the kicker. The donor will remain anonymous. So the big question is, how can anonymity increase transparency? It's no secret that India lacks transparency in political funding. According to a report by the Association for Democratic Reforms, India is amongst the 20% of democratic countries that allow anonymous political donations.
But not just that, 60 to 80% of all political donations in India are made by cash and by unknown sources. Kevin Lee is here to explain how these electoral bonds will bring about some big changes to political funding rules in India. Kevin, over to you.
Well, the electoral bond system will bring 4 big changes to the current system of political funding in India. Firstly, the cap on the amount of money a corporate can donate to political parties will be removed. Remember, earlier companies could only donate up to 7.5% of the average of their net profits over the last 3 years, but an amendment to the finance bill has removed this restriction. Secondly, companies that have existed for less than 3 years will also be allowed to make donations to political parties. Companies donating money via electoral bond will no longer need to disclose which political party they are donating funds to. The electoral bonds will not need to carry the name of the payee, which means that companies can make anonymous donations through these bonds. Of course, the finance minister has clarified that the SBI will have to check the KYC norms of the donor before accepting these, before buying these bonds. And similarly, a political party receiving donations through these bonds will not have to reveal the source of these donations either, so they'll be anonymous on both those fronts.
All right, Kevin, thanks for that. But why should the donor remain anonymous? Here is Finance Minister Arun Jaitley's rationale.
which donor gave how much to a political party will not be told. Once that is told and that identity is known, then past experience has shown, as in the case of check donations, that people are reluctant to disclose how much they gave to each of the political parties. Then people will again go back and prefer to give by cash rather than allow clean money.
But you said it
the existing system, let us see, is a system where there is unclean money and there is no transparency. The new system being introduced will be clean money and a substantial amount of transparency, if not a total amount of it.
Pre-market has slipped a tad, but it looks like at least at those levels it's not falling some more. So some bit of stability near the 10,460 odd mark. Let's focus then on the commodity space. Manisha Gupta is here with a quick roundup. Manisha.
Sumaira, thank you so much for that. It is about the US dollar as well, where we are taking cues from, which has paused in its declines, and that has pulled down the commodity prices as well. So if you look at the metals as a space, that has seen a decline, which seem to be deepening right now. Chinese markets as well have seen, Shanghai Exchange actually has seen metal prices decline. There are, of course, demand concerns, import numbers, whether China will be able to sustain that or not from what we saw in 2017. That has had the investors actually take a step down. In any case, winter is not a very strong demand season. It also is a time when you still have the hedge funds and money managers still allocating monies and weightages to various asset classes within metals and outside as well. And that also has led to some profit taking into the markets right now. And of course, it is the FOMC meeting minutes that would be released. Ahead of that, you have seen some strength come in for US dollar, and that is yet another reason that you have seen a slide come in. So whether it's copper, nickel, zinc, all of that seems to be falling, and slightly sharply now on LME, Shanghai and the Indian markets as well. Dharmesh Bhatia of Emirates NDB now joins us to talk more about that. Dharmesh, hi. It hasn't started as a very good day for the metals as a space. We've seen profit taking come back now. What is your sense? You think this is a good time to go slightly short here, or are you buying on dips?
Good morning, Manisha. Definitely, still the market has shown some kind of correction. It's just the first week of the year, and you can see some profit booking. But the major trend has not been changed yet. Market is stabilizing. I'm expecting that trend will continue. 2016, 2017 was a year for base metals, especially lead and zinc. Both has rallied almost 40-45% on a year-on-year basis. Even copper and aluminium has rose almost 45%. This year, for the first week, is definitely the market will be in a very lackluster move, but the major trend has not been changed. In domestic market, because of rupee appreciation, you can see some kind of correction, but the trend is still firm. I'm expecting copper to again bounce back to 460, 465 level mark. My year-end target will be around 490 to 500. I'm expecting this to continue. Any decline is a good level to accumulate base metals.
Would you say the same for the gold and silver prices also? Because we've seen finally some rally come back in this. Would you call today's decline profit-taking and an opportunity to buy?
Trend is still not changed. I'm expecting the market to be in a very range-bound movement around $12.50 to around $13.50 level mark for the whole year. The market has been in the same range. Any geopolitical tension will trigger the price, but unless there is no downtrend in the equity market, I don't think so gold will rally or outperform any other asset classes. The trend will continue. I'm expecting there should be some kind of a profit booking because market has rallied almost $70 in almost on the year end. I'm expecting this to sharpen correction can be expected in this level. So I will suggest for short to medium term, you can go short. I'm expecting $12.75 to $12.80 in coming days. So short will be advisable.
Okay. Dharmesh, the cues really seem to be coming in from the currency markets right now. And for the last couple of days, we've seen the rupee appreciate quite a bit. Consolidation is the game today, but at these current levels, what do you expect the rupee to do at 63.55 in spot?
I'm still bullish on Indian economy. For past 6 months, I'm continuously saying the same thing, that rupee will appreciate. I'm expecting the year-end target to around 62 level mark, and that will be the level where market will get stabilized. But current level, you can see a sharp pullback rally for rupee, but that's a good level to again accumulate short dollar. I'm also very bullish on euro. I'm expecting euro to touch 120 to 123, whereas I'm expecting the sterling to touch around 137 level mark in coming months. So I'm very bullish on other economy also, but I'm very bearish on the dollar index.
Sure.
Okay, all right, Dharmesh as well as Manisha, thanks so much for joining in, giving us all those details. Well, the Nifty is a nervous one today, but the Nifty Bank is even more nervous. Just take a look at ICICI Bank. That slipped a tad bit. If you just pull up the Nifty last 1 month chart and you'll pull up the Nifty Bank, you'll see the stark underperformance that we're seeing from the Nifty Bank. That's ICICI Bank moving lower as we speak. It was holding with a gain of around 1.5%. But just pull up the Nifty, the last 1 month chart. You'll see, in fact, the way the Nifty has moved. Well, it's up close to 3.4%. Now pull up the Nifty Bank. It'll be up only around 1%. It'll be virtually unmoved, actually. It's been a relative underperformer. It's up only around 0.7%, telling you that, in fact, those bond yields spiking, that's a bit of a worry. Inflation could pick up. That could mean a more hawkish stance coming in from the RBI. So those factors clearly playing on the minds, and that explains why the Nifty Bank is, is underperforming. Well, that's it from Sumaira and me. We haven't been too good luck for the market, really, because when we started off the show, we were sitting with a gain of around 45 points. Let's see whether or not the bulls can defend the 10,450 odd mark. We'll wrap up on halftime report. You stay with us. Business Lunch comes up next.